All right, Pops, another week has come and gone, and here is the deal.
Yes.
New car inventory is up 78% year over year, and some automakers, for example, Ford, we're going to dive into their new car numbers in a second here, they are on the precipice of having an inventory surplus. It's been a long time since we could say something like that. And we also have used car prices, the latest data from Black Book, continuing on the wholesale market to go down. And we're seeing more and more softening in the retail market as well. Where do you want to start, Pops?
The whole thing just seems so inconceivable to me.
Yeah, I showed him Princess Bride. Anyway, Dad, Ford is up to.
Yes.
Ford Motor Corporation is up to a 63-day supply of inventory, 367,000 vehicles in inventory. For those of you playing along at home, we've got two metrics we're going to be looking at: inventory and days supply. Inventory is the unit count of vehicles on hand at dealerships, factory lots, ports of entry, and in transit on a specific date.
Yes.
Days supply is the number of days needed to sell all vehicles in inventory based on the previous month's daily selling rate.
Yes.
Ford's days supply of inventory continues to go up, and this is a direct result of them being able to produce more vehicles and, more importantly, people walking away from orders and folks not buying expensive Ford cars, right?
Well, yeah, that's part of it. And anytime you see where the day supply is increased, that means the inventory has increased, or demand has slowed and decreased. So I think what you're seeing here is you're seeing some inventory gains, and then you're seeing people taking themselves out of the market. And let's remember that a lot of these vehicles were pre-sold or ordered or reservations, and a large percentage of those people, and when I say a large percentage, is probably somewhere around 20-25% of those people who ordered a vehicle or had a reservation on a vehicle are not taking the vehicle. So they're backing out. So suddenly that car is going to stay in inventory longer than it would have or was expected to. So between the softening market and the growing inventory, the day supply is going up. The amount of on-hand inventory is increasing. There should be some deals. All
right, so we're going to break down the other manufacturers as well, and we'll dig into the used car numbers, but there's two reasons that these vehicles are not selling. Those people are backing out of orders, or folks just... One is the fact that when they placed those orders, interest rates were significantly lower than they are today. So those monthly payments are a heck of a lot higher today than they would have been when you ordered it 8 months ago. The second reason, Dad, MSRPs have gone up significantly for most manufacturers. Ford is not immune to that. The average transaction price for a new Ford last quarter was up, I think, 5 or 6%. We'll put the right number on the screen. But it was up significantly from the prior quarter and the prior year.
It was over, $52,000 if I remember.
Fords are expensive all of a sudden, okay? And that's not unique to Ford. All automakers, Toyota, Hyundai, Kia, everyone's average transaction price has increased. And if you placed an order, you're not going to get relief from MSRP increases. You're going to have to pay that.
Well, in some cases, depending if you ordered, say, a 2022 and it comes in as a 2022, a lot of these manufacturers will give you a MSRP guarantee. But if you ordered a 2022 and they didn't build it during 2022 and it comes in as a 2023, well, guess what? You're paying the 2023 MSRP, not the 2022 MSRP.
All right, let's jump over to Honda, Dad. Honda days supply is up to 30 days of inventory, up from 30 days supply of inventory, almost 100,000 vehicles back in their inventory. Hyundai, Kia, Dad, is up to a 14 days supply, so a huge win there, up from a 12-day supply. So these are brands that still have, to be very clear, very little inventory, but it is
limited.
Building back up. Mazda went from a 17-day supply to an 18-day supply. Subaru is almost at a double-digit day supply again. They went from 8 to 9. Toyota went from 20 to 21, and Volvo went from 24 to 33. So we're not seeing huge jumps in day supply, maybe with the exception of Ford. Their numbers are actually very significant. Over a 60-day supply of inventory is a lot in today's market.
It is. It's nowhere near what it used to be, but it is a move in the right direction. So that there is actually, especially at Ford dealers, Stellantis dealers, probably some GM products, there's actually on-hand inventory for people to look at. And if they go in and they find a car they like, they could actually take it home that day if they wanted.
Surprise.
Yes,
it doesn't
it
happen.
hasn't happened in a while.
All right, Dad, we also have the latest data on the used car market. But actually, before we do there, so on the new car side, more inventory means more negotiable. End of year, you've got a good opportunity to get some deals. And likely this will continue into 2023. So before we pivot to used cars, that is like the assessment, like what it means for you is there should be more opportunity.
Absolutely. Thinking about getting an extended warranty? Go to joinyaa.com and check out our pricing there. There's no obligation, no spam, no robocalls. YAA for your extended warranty.
On the used car side,
yes,
wholesale markets, we saw another significant decline, 0.72% week over week. We are seeing this across all segments of vehicles, significant drops among subcompact cars, full-size cars, subcompact crossovers, full-size pickup trucks. Everything is down.
Yes.
When you read that into the report here, we are still seeing retail prices come down, not as fast as wholesale, but they are coming down. It's what happened at the auction lanes. This is what I thought was interesting. The sales rate at the auctions dropped to 49%. Less than half the cars that are going to the dealer auctions are actually selling at the auctions. Let's read what Black Book had to say. Auction lanes showed increased activity this week, but are still slower than normal overall. Buyer count was consistent with prior weeks, and they were hoping to be able to negotiate. Some buyers were physically in the lanes, but most were online. Sales rates seem to be down this week. There are still some, quote, if sales coming through, so some sellers are willing to negotiate for the right price. An if sale would be a vehicle that didn't attain the floor price, but then was negotiated on and potentially sold. Inventory count is overall still down, but consistent, which might be why some sellers are not willing to negotiate. After a short absence, rental car companies came back this week strong in the lanes. Large independent dealers and rental car companies were very competitive with each other, while it seemed like the smaller franchise dealers stepped back a bit this week. There are still very few model year 2023 vehicles coming through the lanes, but we do anticipate seeing more of them in the near future. Overall, the wholesale values are continuing to decline. We do not expect much to change for the rest of the year. I read something from Alex Yurchenko, the head of data science at Black Book. He was doing an interview with Automotive News, talking about how he expects used car prices to continue to decline and get back closer to historic norms. Another week of declines in the used car market. It just means more negotiability if you're going to buy a used car, correct? This
has been going on since July. So we've had a steady decline in wholesale values from July. That's like 5 months, folks. And so we're probably approaching an 18% decline in wholesale values over the course of the year so far. Now, granted that they went up 50% over the prior 18 months. But it is a good sign that we're seeing some correction on wholesale values. Eventually, we will see maybe not an equal correction in retail values, but some type of correction in retail values that the dealers are asking for the vehicles.
I think you're using the right word, correction. I think we're seeing a correction both on the new car side with the Ford inventory. That's a correction. They didn't want it to be as low as it was, and it's correcting. They're getting back to historic norms. And on the used car side, it's a correction. Prices shouldn't have been as inflated as they were, and they're correcting. They're going back to where they should be.
And the reality is that even though we've seen about an 18% decline in wholesale values, we've only seen about a 5 to 7% decline in retail values. And even with those declines in retail values, the asking price for many or most pre-owned vehicles is still way too high. So two things you could either do: stop buying cars, which would force dealers to lower their prices even further, or if you are interested in a car, negotiate hard to get a better price. Don't forget, dealer personnel is trained that they have to get 5 no's before they get a yes from a customer when they keep asking them to buy a car. And if you stop at 3 or 4, well, as the salesperson, you're never going to get that yes. As a customer, you need to be trained to take at least 5 shots at the dealer to get them to discount the vehicle, to negotiate the vehicle. So if you ask once or twice, well, I need you to get here or here, and they go no, and you don't ask a 3rd, 4th, or 5th time, well, then you're never going to get to where you need to be. So if they're trained to ask you 5 times or 6 times before you'll say yes, you need to be trained to ask them 5 or 6 times before they'll do what you want them to do.
That was a knowledge bomb. Thank you for that, Pops.
Well, that's what we give here, knowledge.
Thank you, Dad. All right, thanks everyone for watching.
Yep, thank you.